So once we've settled on the asset allocation, now we go determine the proposed holdings.
Oh, I thought this doesn't go down to I thought this only goes to the asset allocation level.
Only at the current holdings. Proposed holdings, it actually goes down to specific holdings. So model portfolios entered. So right now, when it comes to picking proposed holdings, there's 3 ways to do it. You can manually just enter symbols and create a portfolio that way and allocate by percentage. Okay? You can manually select a model portfolio and that'll bring those particular securities into this. Or, going back to the prior step, you can have the application automatically map the model portfolio that's the best fit to the asset allocation. So if there's a range of model portfolios that have been entered in, you have your dynamic asset allocation, but the models are ultimately what's implemented for the client, and the system will map the model that's entered that's closest to the asset allocation for that account that's recommended. And you can see the tracking error for the model against the asset allocation that's recommended.
So you could build your own models with your own favorite mutual funds or ETFs, I would imagine. I guess you can, how about individual stocks as well?
Exactly.
And, but it doesn't automatically identify securities or a list of securities. It won't default to individual securities. It'll default to portfolios, right? It won't be able to find, like if I want large cap, will I have to associate securities with large caps?
Right, so what this you can do that by hand, or if you've already created, let's say you had a growth portfolio for taxable accounts or a moderate portfolio for taxable accounts. So if you've had pre-created models, it can automatically map to those. Or you can
yeah, that's what I was trying to get at, is that it won't. It has to map to a portfolio to do the auto select.
Exactly.
To do the auto select. It can't map to individual securities. Otherwise, you have to manually input individual securities.
That's correct.
But is it just a matter of time before you map to the individual securities based on, so I could just say, fulfill my large cap without having to say, give me large cap in the context of a medium risk portfolio?
No, I mean, that's a good question. So in our current non-goal-oriented proposal tool, you can do that. In fact, you can create your large cap model and then blend models. Let's say you had a large cap model that, you had a handful of large cap individual securities, either ETFs or individual equities, and you could even blend models. That's the kind of functionality we'll have in here as well. But that's not today. I'm going to run a proposal. I got to quickly run a Monte Carlo. And this is in my QA environment. So the Monte Carlo runs a little slowly. But what it's doing is generating 1,500 paths of various market situations, market scenarios, economic scenarios. It is running both the current and the proposed portfolio and generating both wealth trajectory numbers, but also the probability of success of achieving the various goal priority classes and associated shortfall risk. And I'll show you that when this runs. There's the wealth trajectory charts, which are standard wealth trajectories of the current versus the proposed portfolio. And then there's the simulation summary. Now I randomly entered in these portfolios, so there was no thought that went into
no,
one portfolio to the other. I just wanted.
No, don't sweat that. But the thing is, though, now this is output as an HTML report. It looks like.
No, the actual report is a PDF.
Yeah, that's what. So you're okay. So you're just showing me the.
This is just the advisor screen.
Yeah. Okay. So
they can look at the numbers.
Yeah. What do I?
The probability of success of each portfolio across the goal priority classes. And the other interesting statistic is this average percentage shortfall. This is actually pretty meaningful. So, and it's important for that advisor-client dialogue. When the path doesn't meet, in other words, when there's failure, how much is their failure by? So when the proposed portfolio misses the target by 50%, of the 4% of the time that it failed by a lot. It failed by 50%. That's significant. So this is actually not a good proposed portfolio from that standpoint. That's important information for the advisor to share with the client.
Yeah, that's interesting. Yeah, because normally you just see the confidence or the probability of success ratio.
Yep.
And you don't see the amount of shortfall.
Yeah, which is, hey, listen, if you have an event where you do miss, this portfolio, you're going to miss by a lot.
That's really
the
interesting.
Portfolio numbers actually look better from that standpoint.
And is that Monte Carlo? Is that using returns? Is that using past returns from like the last 30 years, or is that really randomizing numbers?
Actually, it's more randomizing in the sense that it is truly forward-looking. It's using our capital market assumptions for future securities return, but it's basing it on the actual holdings. So the asset classes in the current portfolio, but the specific holdings in the proposed portfolio.
Okay.
So what does that mean? Well, the proposed portfolio is broken down into asset classes, and so there's a style analysis that's gone on, and then those asset classes have expected return assumptions associated with them, and it's based on those expected return assumptions.
Right.
And our expected return assumptions are a combination of our analysis of historical returns as well as future economic environment, and so forth.
Right. So it's not using just past returns. It's using your own capital assumptions to make the Monte Carlo.
Yep.
Yeah, I'm just trying to think if that's how some of the other planning apps do that. Would you have?
Yeah, I mean, most that we've seen are just purely on historical asset class returns.
Mm-hmm. Some give you a choice, but you have to, like SunGuard, I think, comes with a module that allows you to get some asset class returns, some forecast expected returns.
Mm-hmm.
And I think you can input that into Money Guide Pro.
Okay.
I think there is a way, but I think the default is just using historical returns. But I'd have to check that to make
Got
sure.
it. I'm not familiar with their Monte Carlo. Well, the last step is generating a proposal. So, that's entering or editing any additional client information that you'd want on the proposal, entering the advisor information into the proposal. There's some basic configuration. We'll have certainly more over time, like our current client acquisition solution. There's sections that allow dynamic text, one after the balance sheet, one after the proposed portfolio recommendation. And then what's generated is a landscaped PDF that summarizes the inputs and outputs that we just went through. This only takes a few seconds, and we'll go take a look. So, basic table of contents with the various sections. Initial case summary.
Can you email me one of these?
I can, absolutely.
I'll post it.
Yep. Count summary, that savings balance sheet object, summary of the goals that were input, the priority classes.